everybody. Good evening, and welcome to tonight's topic of conversation, which I'm really excited about. I've got Matthew Calhoun with Equity Trust that's going to be coming on and sharing with us about using your self-directed IRA to fund and build your wealth in your retirement. As we get into this, we're going to talk about a couple different strategies, what some people have done to grow their wealth using their self-directed IRA. I'm going to go ahead and bring Matt up, let him introduce himself because, I found that people can talk more effectively about themselves than sometimes I can. So, Matt, welcome to the stream. I appreciate you taking time out of your evening because I know most days it's a Monday through Friday, 8 to 5 kind of gig, right? So you staying up this
Sure.
late with me, I do appreciate it.
I appreciate me on. Thanks, Lee.
Yeah. So if you don't mind, let's just go ahead and talk a little bit about what got you into working with Equity Trust, and could you give
Yeah.
me a little high level about what Equity Trust is?
Yeah. Started my career mostly did, I don't know, 10 plus years now in financial services. A lot of that started as a financial advisor, like kind of how you think most people do, recommend stocks, bonds, mutual funds, do some planning for clients. Ironically, during that process, my manager got, kind of a mentor at the time, was like, you should buy a duplex. That if you want to get started in investing, buy a duplex, rent one side, live in the other. Um, did that and did it again, got another one, and just kind of caught the real estate bug. And it was kind of hard to start, recommending good stock picks or different types of investing when this real estate thing exists. Um, and just kind of for a switch at the time. And I kind of knew this was out there, the self-directed IRAs. I'd heard it on some podcasts when I was kind of doing some learning through like Bigger Pockets and different things, but didn't really know too much about it. Actually applied for a 1031 job through Now Equity has a 1031 arm, and like, thanks for coming in. We really love you, but we already hired that position. I'm like, oh man, so much for that. But they, hey, this self-directed IRA piece, we really think you'd be a good fit there with the licensing and different things. So the retirement accounts, real estate investing. So now it's kind of a merger of the two, and there's just so much more. That kind of opened the door to like, wow, why didn't I know about this when I was studying for state exams and getting all this information? Realizing this alternative asset classes existed, then people could do with the retirement accounts. Kind of just really got passionate about it, and then with it was a predecessor company that Equity bought that I started with, and I think going on about 8 years now, I've been doing just the self-directed piece. So yeah, that's kind of
Wow,
how I got started.
definitely not
And
your first day.
yeah, yeah. So
Well, let's unpack that just a little bit because you told me that you started kind of investing, and
mhm,
financial advising. Then you got bit by the real estate bug.
yeah,
So this is, and I'm not saying that wealth advisors are not or opposites by any means. There's a number of them that we'll work together on a few projects, and some have even done private lending with me, just
yeah,
because diversification. It's key in today's landscape. So as that happens, going from really kind of telling people, hey, these are the stocks that you should buy, and
hmm
then you see the results of other investments. Um, where did you say that, or how old were you when you decided this was, going to be kind of the change, the shift? You said about 8 years ago.
yeah. I think 25, 26 is when I bought our first duplex. Um,
Okay.
Around that time.
Wow. And did you buy that? I know you live here in Fort Myers, so
Yeah,
north of me in Fort Myers. So
yeah.
what was that like? Was it up in that area, or did you invest remotely?
No, everything's pretty much here in Fort Myers that I did. We'll look remote here soon, but so we have three duplexes here in the Fort Myers area. Need some rehab, 80s property, duplex in San Carlos Park, and live in one side, around the other, and whether through just luck and
Yeah.
whatever or smarts, they've done really well. And like as you mentioned, like yeah, you can definitely grow wealth in the stock market. People do it all the time, but not quite like real estate.
Yeah.
basically some elbow grease, created a lot of wealth, and just different reasons that real estate's a powerful asset class.
Well, if the time comes that you want to dispo that property in San Carlos, let me know. All
Yeah.
right. So just
All
kind of
right.
put me on that buyer's list there if you don't mind. Now,
Yeah.
a couple things about the self-directed IRAs. I've got some notes because some of this, quite frankly, is still over my head, which is why I wanted to have you on here mainly, so I can help to educate others, but also educate myself. So I'm just going to refer to
Sure.
these notes. I know sometimes, and people have said this before, that it's only for using a self-directed IRA. It's only for the ultra wealthy. However, there have been some of the case studies that I've come across where somebody has funded a full or self-directed IRA, but it's for their children. So there's a certain
Hmm.
name for that one, right? But they would fund it for as little as $500, and they would
Hmm.
wholesale properties and use the self-directed IRA for the earnest money. And then whenever they take that, then they take their $5,000 assignment fee back into that child's account. Well, it just grew $5,000 off of a $500 EMD, right? So, could you elaborate a little bit about this being a tool that anybody could really use?
Yeah, yeah. I mean, self-directed IRAs sometimes catch headlines when it's the Mitt Romneys or the Peter Thiels of the world. Everyone thinks that's what it's for, but the vast majority of our clients don't have near that kind of wealth. They're funding it, with jobs they've worked for a few years, and they're rolling 401ks over. Or as you mentioned, their kids are part-time workers and they're contributing to that account. And I saw a guy recently put, I think he had 5 kids, and he put each of their education accounts, because we can self-directed education
Yeah.
accounts, on a storage facility. They were part owners, but they got a little piece of the ownership stake, and they did really well. So yeah, you can be very creative with it. It doesn't take a whole lot of money to do stuff. If you're willing to get creative and structure a deal the right way, your retirement account can get involved.
Yeah. Now, I know you've got a presentation for us. And
Yeah.
again, anybody that's watching this, please, by all means, jump in, drop some comments, drop some questions. Let's engage with Matt while we've got him here, because there are some really great advantages to this, but there's also some things to be aware of, some risk, some compliance that you have to make sure that you do so that you're not going to, trigger any kind of penalties or fees. So, Matt, I'm going to go ahead and bring up your, I think do you have your presentation? There we go.
There we are.
And I'm just
Quick.
going to remove me. I think I can do that. You go ahead and do your
Perfect.
presentation, and I'll just
All
jump
right.
in with some questions.
Sounds good. So yeah, this is just a quick PowerPoint to kind of be a good overview of self-directed IRAs and what they can be used for, what you can and can't do. Pretty quick presentation, so there'd be definitely some time for questions as people have them. Obviously, my contact info is there. I do this every day, speaking to people, investors, wanting to know, how do I structure this? Can I do this in my retirement account? Direct phone number is there. At the very end, there's a QR code to my calendar. Feel free to set up a time, because every situation is a little bit different, and as you guys know, any deal can be different as well. Start off with I'll start with disclaimers. Not a financial advisor. Was at one time, but don't give financial advice. You know, not an attorney, but we can advise on what an IRA can and can't do. Our job as an administrator is to dot I's, cross T's, and make sure that those retirement funds that have this great tax advantage can continue to keep that advantage as well. So a little bit about Equity Institutional, which is our branch here in our Fort Myers office. Formerly, it was Midland Trust Company. Was purchased by Equity a couple of years ago. We were rebranded as Equity Institutional, so Equity Trust as a whole parent company has about 400,000 account holders, 58 billion in assets under administration. A lot of different offices around the country. Fort Myers, like I said, where my office is, and we tend to specialize in private debt, private equity investments in our office, but we'll service a lot of different asset classes. Where Forbes ranked us as one of the best actually in the private equity space as well. So it's kind of where our expertise comes along. First question I always get, what is a self-directed IRA? And the truth is, there's actually no such thing as a self-directed IRA. So it's a very short presentation. It's really a good marketing tool. So the IRAs that you set up with Equity Trust or any other self-directed IRA custodian are the same as an IRA you would set up at Schwab Fidelity. The difference being the custodian allows you to invest in other asset classes. In I think 1974 is when IRAs were established in the tax code. There was nothing that said you can only invest in stocks, bonds, mutual funds. It actually allowed you to invest in a lot of different asset classes. The large custodians of the world already sold stocks, bonds, and mutual funds to you, so they figured we might as well keep selling stocks, bonds, and mutual funds in retirement accounts. So that's where that preconceived notion came from. A company like Equity, who's been doing this for about 50 years, was allowing what could be like one of the first real estate syndications in a retirement account early, 40 plus years ago. And then since then, specialized custodians allow you to invest in all kinds of asset classes. So people come to us to invest in real estate, notes, private companies, private equity, private debt, futures, forex, crypto, precious metals. We even have a client who invests in racehorses. He flips racehorses in his retirement accounts. So a lot of different options as far as what you can do. Like I said, the self-directed thing is really just a good marketing tool. Some of custodians have actually even got on to that, and they'll call it a self-directed IRA, and they just mean that you can pick your own stocks. What you want is truly a self-directed IRA custodian who allows you to invest in asset classes that you know really well. So what are the advantages of self-directed IRAs? Big one is the tax advantages remain. So if you're doing this with two most common account types, traditional IRA, you're still getting that tax deferred growth, meaning while your investment's in that account, it's not getting taxed. You can flip a property, make a very nice return. You're not paying any income tax. All that money goes back into your retirement account, and it can be deployed into the next deal. With a traditional IRA, you only pay taxes on what you pull out in retirement. So you get the flexibility of deciding how much you want to pull out. You pay taxes, ordinary income tax, on what you pull out. If it's a Roth IRA, it still generates the same tax benefits over the course of the investment. The biggest benefit of a Roth is when you pull the money out, it's tax-free. So extra benefit for Roth being tax-free in retirement in retirement as well. Other advantage, we kind of touched on this a little bit, the investment options are wide open. So not only are you being able to pick your investments, you're getting to diversify across asset classes. It's kind of what I call true diversification. It's April 2025 right now. If you've looked at your stock portfolio, you don't feel very diversified right now. Markets are big volatility in the markets right now. I always used to tell a story about NVIDIA did earnings, when I was driving, one day, and I was wondering why my account had moved. I didn't own NVIDIA stock, and that's really was the entire market moved because of one company's earnings. So it just doesn't feel very diversified in the stock market. Being able to get your retirement funds into other asset classes lets you truly diversify. Your rental property didn't swing wildly based on one company's earnings. In the age of basically 7 companies being the deciding factor on the stock market, other asset classes don't have to move as wildly as the stocks do. Popular reasons people use self-directed IRAs. Big one, diversification. We kind of talked about that one already. Job change is very common as well. So while you're employed with a company, if you've been contributing to their 401k, 403b, 457, whatever the retirement account for the job is, most of the time it's locked up there. You can only pick or only invest in what they offer you. But once you change jobs, that plan becomes mobile, and you can roll it into a self-directed IRA, pick investments that you're more comfortable with, you're more passionate about, what you think can get maybe a better return, or just diversify your holdings so you're not all in one asset class. Illiquidity is a big one. So most Americans hold second most wealth that they own in their retirement accounts. First would be their home. They have a lot of equity in their home, but their investable assets, most of that's held in retirement accounts. So being able to get into investments, some people think, well, I don't have money to get into investment. You probably do. You probably have it in this retirement account or IRAs. So it just frees up the ability to get into investments, get that first real estate deal, lend on, a property or lend money for a property out of this retirement account and get exposure to that asset class. Tax mitigation is a great one. Like I said, it's a good way of getting a better net return. So if we're apples to apples comparing on a lot of investments, the net return in your retirement account is going to be higher because there's absent taxation. This can be a good idea to look at investment options that maybe aren't tax advantage as much and put those in your retirement accounts. If you're getting 1099 income on money you're lending out, you don't really have too many deductions that you're going to be able to do outside retirement account. Inside your retirement account, doesn't matter. It's all tax free or all tax deferred. So definitely a benefit of using the retirement funds there. A little bonus one, investment timelines with alternatives tend to line up really well with retirement accounts. If I'm investing into a real estate fund that may have a 3 or 5, 10-year hold, that's a lot of a commitment out of my savings account to invest. And I hear all the time from investors like, I don't know if I can give up that money right now. It's not liquid. I'm not going to get it back. The plan is to exit in 3-5 years. But if someone's not retiring for 3 to 5 years, it lines up really well with this retirement accounts plan. So that's kind of the idea as well, is sometimes different investments will make sense to put in a retirement account just because the time frames make more sense. It's a longer term investment.
So Matt, if you don't mind me jumping in with that, how often do you see people, because one of the projects that I'm working on right now, we're doing a capital raise. Well, I've got a 506C and then I'm over in a 506B that we're doing a friends and family raise right now for an apartment complex.
Yeah.
How easy do you see it being for people that say, they're not really excited about the stock market right now. They're not really enjoying the volatility that's the ups and the downs. And as that happens, maybe they're 5-6 years out, like you said, from retirement. They're looking for an alternative investment that they can go over here and they can put it into a real asset, right? Sticks and bricks that they could actually go over there and drive to and, put their hand on the building and say, all right. And then they're standing on dirt that even if something comes and knocks down the building, at least there's still some kind of intrinsic value there. How many people do you see in this kind of landscape to where they're moving, not all of it, even I wouldn't tell somebody to move all of your money out, but as they diversify, just to kind of hedge against some of the volatility. Where do you see that happening? Are you seeing more calls coming in and more accounts getting set up for these kind of movements?
Yeah, really the industry as a whole has just gotten a lot busier lately. People are really looking at alternatives. We call it we're in the time of democratization of alternatives. That just means it's going to Main Street. People are getting exposure to this and saying, I want to do that. Like, this isn't just something that, the uber wealthy can invest into apartment buildings. If you've been, saving a little bit in a retirement account for a while, anybody can kind of get into these deals. And as you mentioned, how easy is it? If you have an IRA, 7 to 10 days, we can get you invested into a real estate syndication like that. It's
So
really
7 to 10 days from
process.
first call to set up.
Account open, transfer from Schwab, Fidelity. We'll prepare all your sub docs for you, especially if it's your first time investing in deals like this. We'll get it done. We'll fill it out on behalf of your retirement account. You just have to click the authorize us to release the wire. 7 to 10 days, you're done.
Yeah. Now, it's been a while, but one of the things that I've always respected about Equity Trust is the way that you actually help somebody with their account. So there are others. I'm not going to drop names because I don't want to, really badmouth anybody else because that's not how you make yourself stand out. But other ones, they'll just give somebody a checkbook once they open up the account. And they're like, here, we trust that you know what kind of penalties to avoid and what prohibited activities to avoid. So good luck.
Yeah.
And then whenever they come out and they're like, I got penalized 35% and I got taxes and all these other things that I have to deal with. Does Equity Trust still kind of have that process of issuing payments? I've got a couple investors. One, she owns, I think it's it's a triplex back in Louisiana. She used her self-directed through Equity Trust, And that was one of the things that she enjoyed, was the security of knowing I'm not putting my IRA at risk by doing this.
Yeah, and on the institutional vision, we take it a step further. We actually give you a dedicated point of contact for the whole time of your account. So you have one point of
Okay.
contact. That person can review all your documents. You have a question: should I pay this expense? Should I do this? We have one contact for you. It's great. No, there's a whole team that can help out, but it is kind of nice to have a familiar voice. You know that person.
Yeah.
They know your account. They know the investment you're in, and it just helps. A lot of these times, like I mentioned, some people are really professional investors, but for the most part, some of these are the first time that people have gotten into these investments. So it's
Yeah.
nice to have somebody who's done it 10 times that day, who can kind of be a reassuring thing. You kind of mentioned, so the checkbook thing, we do it as well if you're there, but to force people into it, it's just not good. There are some advantages, but to the custodians that do it, sometimes they're just shifting the responsibility off.
Right.
So yeah, it's something that can be done. It doesn't need to be done in most cases. Most cases, it's kind of nice to have the administrator watching everything, making sure you keep those advantages. Like we're on the advantages page, you want to make sure that you keep those advantages. You don't want a tax bill and then have the IRS mad at you. So it's nice to
Exactly.
have a custodian that's going to partner with you there.
All right. Sorry for the interruption. Just had to get that out.
No, appreciate it. All right, so it's all been good news at this point. So there's got to be something, right? So let's talk about a little bit about what you can't do in your retirement account. So when the taxes, the IRAs were established in '74, the only asset classes that are said you cannot invest in are life insurance. Life insurance has its own tax benefits. You wouldn't want your, tax beneficial death benefit to go into an IRA. So life insurance can't be held in a retirement account. And then collectibles, little vague on collectibles because it's not really expressly, but we kind of read that as antiques, baseball card collections, artwork. There are groups that have securitized these kind of investments, but for the most part, can't be held in a retirement account. Hard to value is kind of the justification that we use there.
So,
Um,
Matt, are you telling me
this,
that I can't use my Beanie Baby collection?
no, sorry, can't get in there.
No need to
Just,
continue the stream. Y'all have a great night.
I know, yeah, I know. It's just hard to put a value on those things. But we see groups who've tried to piece together or create an entity structure on a piece of art and kind of sell pieces of it. So kind of syndicate artwork. Yeah, a little bit. It's possible, I guess. It's kind of gray, but something we don't see very often.
Okay.
The big one really is prohibited transactions. So this is who you can and can't do business with, what you kind of can't do, even within the acceptable asset classes. So real estate is the easiest example, just because it's a lot of you know paying people. There's a people business. So the prohibited transactions outline that you cannot do business with yourself, spouse, lineal family. But so I think about the family tree, left and right's fine. So brother, sister, cousin, aunt, uncle, completely fine. But you can't lend out or rent a property out to your son. You
Okay.
can't sell a property that you already own to your retirement account. You can partner with those individuals and you can partner with yourself. It just has to be done in the right way. So this is another benefit of having the custodian that's hands-on, can help you. It's all about deal structure. But as far as if I already, for my example, if I already own those rental properties, I can't sell them to my retirement account, put them in there now to get the tax advantage. I would have had to have bought them initially. So another thing that, like I said, just helps to have is I won't spend too much more time on what can and can't be done. Obviously, if the questions come up, I can answer those. Also, you have my number, so if a scenario comes into play, just you can ask me whether we think it can be done or not. All right, back to good news. So,
So,
what types of accounts? Yeah, sorry.
oh no, I was going to say. So here's a scenario, and we can wait for the end of the presentation. But I think
No.
this kind of feeds into the question that I've got. So there's again, I'm working on some apartments in St. Pete. And
Mm-hmm.
one of the things that we're looking at is the equity multiple is going to be like a 1.97 over 5 years. So with that, let's just and again, this is not legal tax advice. I get this, and I don't expect anybody that watches this to think that it's legal or tax advice. But in your experience, have you seen where somebody would take because one of the plays about this is it's an operational lift, right? So it's just simple management change, clean up the work orders, replace the roof, do a couple small things, but then start rolling it up to market rent. So over the course
Mhm.
of that 5 years, there's going to be a cost segregation done to where we're going to accelerate the depreciation of the property, and then whenever it exits in 5 years, you know how depreciation works up on a
Yeah.
sale is you have to recapture that. So would you
Mhm.
say that if somebody uses a specific type of IRA, like a Roth versus just a standard, um, obviously whenever that happens, will they be recapturing that depreciation as they roll in to that Roth? Because well, it was already post-tax money that you used to invest.
Yeah, for the Roth IRA investor in this case, their taxes are actually pretty simple in the fact that it's all a mute point. In the most basic scenario, I could take this kind of like a 202 level or even higher.
Yeah,
But for simplicity, we'll say that they don't unfortunately get to share too much in the depreciation, the bonus depreciation or accelerated depreciation, because it's tax free to them anyways. There's nothing to write off for
yeah,
the Roth investor. So they're kind of upset on year one because everyone else is talking about how they got to write off a bunch of income, but they didn't
yeah.
because their income's tax free anyways.
That's right.
Now in year five, they don't really care what the exit strategy is now. So most of us would be like, come on, we got a 1031, we have to find another deal, we have to do something
Yeah,
else. Because we don't want to recapture depreciation. The Roth investor doesn't care because guess what? It's tax free to them as well again. So it
yeah,
just makes things simple for them.
yeah.
You know, who breaks out more, who gets more advantage in the end, hard to say until the deal's done. The nice thing is the Roth investors very passive and doesn't care. They're like, you know what, just go
Yeah.
get me a good return, it's tax free in the end. um, so for the most
Yeah.
part they're
So
still
they're
going to be
not
pretty happy.
sweating you calling up the 1031 division saying, "Hey,
Yeah.
need some help." It's the other one. Okay.
Yeah.
So I'll let you continue now.
Yeah, and there can be some nuance to that, but for simplicity, that's kind of the best answer there. They don't really care about the tax write-offs just because there's nothing to write off for them. It's all tax free anyways. But what accounts can be used? This isn't the full list. It's just kind of the most common we see. But basically, if it's a employer retirement plan, it can be moved over. So not listed on here would be like pensions, 401as, quite a few different plans that are on there. Most commonly, people will know 401ks, 403bs, 457s, but it can be more. And if you have an IRA, traditional is the most popular account type, but Roth, SEPs, you can do simples, inherited accounts, different options there. But you can self-direct things that are not retirement accounts as well. So I kind of alluded to this, but HSAs, which are health savings accounts, a lot of people have health savings accounts, that can be self-directed. ESAs, which are education savings accounts, so those can also be self-directed. So it doesn't have to be a retirement account. They basically have the same advantages that the retirement account side would have to. But if you have questions, obviously, on what accounts can't be used, definitely reach out. One thing I'll say on the employer, if it's a current plan that you have, there's likely an age restriction or a separation of employment restriction, meaning you have to no longer be employed there. But some plans are established in ways where, at 50, 55, 59, you can start using the funds. The most flexible I've seen is kind of like dangerous work, linemen, different ones. They have some pretty flexible rules there, but most people are going to be stuck probably till about 59 or change of job.
Gotcha. So what I'm hearing is quit your job, roll it and go.
Yep, that's the
Okay.
that's the
So
advice.
again,
You
not life advice.
joke, yeah, yeah. I have seen it. In in 10 years, you have ones I've had business owners fire themselves. Um, so yeah, you never know. So some considerations when using your retirement accounts: must engage an IRA custodian. You can't do these investments, this type of account, without a custodian. The reason it's number one. So bad example. We had a client who called in. Said, okay, I invested. It was $500,000 into his friend's startup company through his E-Trade account, and immediately, flags going off. I'm like, E-Trade definitely is not going to let you invest, into your friend's business. can you just kind of go through what happened? He wanted to transfer it to us. I was like, well, yeah, I told them I wanted to do this, and they sent the money out. I got a check, paid it, and I'm like, okay, how long ago was that? And we went through it, and it'd been about 100 days. And if you would have done it within 60 days, we possibly could have like made things right. But because we'd been on 60 days, which is the rollover period, he'd done the investment outside, and E-Trade had coded it as a distribution. They basically send the money, say, here you go, have fun. It's outside retirement account. His friend titled it correctly, but the problem is E-Trade never knew what was going on. Really, they just thought it was a send out. So he got a tax bill, 1099, for $500,000 on that investment, and it couldn't do anything. We couldn't get into a retirement account after the fact because it had been too long. So it's really good to engage the custodian ahead of time. When you're going to do these investments, if you don't fund your account immediately or ready to go, at least you have it set up so when the time comes, you're ready to go. You don't want to run into a situation where you can't get it done in time, you miss a deadline, you miss a deal, or in this case, make a bad tax mistake.
One of the things, Matt, I've found is that making money isn't necessarily the challenge. Keeping it from being overtaxed, that can be the challenge, right? Because moving down here to Florida, 3 years ago this week, we got down here and we were just like ready to go, man. We're down here loving it, taking it all in, and then I get a call from my tax people, and it was like, hey, look, guess what? You owe 6 figures more than you thought you did. And it was about recapturing some depreciation on some exits, right? So caught us off guard. So I will tell anybody that's watching this, make sure that one of the most important people on your team are going to be your tax people. So anyway, back to the show. Sorry.
No, it's a great point. Most people don't realize it's one of the largest expenses that you have is your taxes, between sales tax, income tax, everything else. So anything you can do to mitigate those taxes is very important. Another thing to keep in mind is when you're doing the investments, one thing we're doing as a custodian is making sure that the investment, subscription documents, your joint venture agreement, your real estate contract, your note, whatever you're investing in has the IRA listed correctly. So we refer to it as your IRA vesting, but it's just the legal name for your retirement account. And that, it's really just to protect you on that situation, making sure that the IRS knows this is a retirement account investment. There's obvious separation. You're using the custodian's tax ID. On the note example, if you have to foreclose, then you want to make sure that you can foreclose the property in the name of the retirement account. There's not some change of ownership where they accidentally put in your name personally. So something we're checking for as a custodian is to make sure that this is all done right on your investment documents. But if you have a custodian who maybe doesn't check as much, something to keep in mind is just make sure all your documents are correct. So any cash flows involving the investment also involve the custodian. So rental income, note payments, distributions back to the account, they go back to your retirement account. And if there are any expenses, so capital calls, expenses, CapEx, that comes out of your retirement account. This is based on the ownership of like percentage of ownership. So it's not, if it's 50-50 ownership, 50% of that expense comes out of the retirement account. So it's not the entire expense has to, but anything that the retirement account should be paying feeds through the retirement account. Anything it's owed is paid to the retirement account. And even if you're in retirement age, you still want to, if you're planning on taking, that rental check out, it goes back to the retirement account, deposited, the custodian sends it to you so they can do the proper tax reporting. Lead time, I kind of led into, we can get something done in 7 to 10 days. It is nice though to give yourself at least, 1 to 3 weeks of, I don't have an account yet, fund it, and getting the investment done. It can definitely be done faster, but it's nice to give yourself a little extra lead time. Nothing quite gets our team sweating like, I have a closing and still waiting on that money to come in from Schwab or Fidelity. So it's nice to give yourself a little bit more time just to not miss out on a deal. And then I've kind of hit it a couple times, but in most cases, if it's an active 401k, unless you're the business owner, it's going to be off limits for that time. But depending on if you have some leeway with the 401k, you might be able to change the rules. So common asset classes, kind of went over this a little bit, but just to kind of get the wheels turned on what can be done or what we see most typical. Real estate, both passive and active. So investing in a real estate fund syndication, probably what we do the most um, as our division, but a lot of active investors too, buying land, buying fix and flips, like you mentioned, wholesaling, buying whole property. A lot of different options as far as being a little more active on the real estate investing as well. Private equity, also not including real estate, we see a lot of that. Debt and debt funds are picking up. It's probably the most we've seen in the 10 years I've been here. A lot of people are getting into the debt markets, whether it's direct lending or debt funds. We'll see venture capital, pre-IPO on occasion. Precious metals, I'm sure most people don't realize they have heard of self-directed IRAs before. When they, late night TV, you're buying metals in your retirement account. That's what they're talking about. They're talking about a self-directed IRA. So one of the probably longest asset classes that people have held in retirement accounts. Into the newer ones. So crypto is pretty new, but we're seeing a huge influx of people invest in crypto in their retirement accounts, futures and forex trading, and more. As I mentioned, guy flipping racehorses, a lot of different, crazy investments. I've seen airplanes, different things as well. So you can get as creative. Like I said, it just can't be life insurance collectibles. There's a lot of gray in there and a lot of woodroom.
See, that's really kind of intriguing, because you're looking at crypto, which some of these meme coins, somebody's like, hey, yeah, I saw this on a TikTok, and they want to go and roll 20K, but yet a collectible like a piece of art or something like that has an appraisal attached to it, it's a tangible asset, they can't, but yet crypto could. That's actually kind of surprising to me.
Yeah, so granted, there's no guidance from the IRS. They're very quiet on anything regarding crypto. But most groups can hold it. The difficulty with crypto is just making sure a broker can basically broker the exchange. We treat it a lot like precious metals in the fact that we tell people to use third-party storage. So that is pretty well outlined of precious metals. If you can't kind of store them under your mattress in your vault, you need a third party to hold on to your metals. That's, like I said, very well known in retirement accounts. So we treat crypto the same way. We say if you have the keys, you have some, don't keep it on your own hard drive. It has to be held by a third party. And that kind of comes into play. Like, what is that third party willing to hold? Are they willing to hold a meme coin? Or most have kind of gone to quality. It's kind of the Wild West there for a bit, but they've kind of gotten a little more to like holding only like 4 or 5. It's not my expertise, but I do kind of know how that works on that side. So yeah, and then as far as the collectibles, what we got a little weird was when NFTs were a craze. We didn't really get into it, but I know it was kind of like, is this a cryptocurrency because of the blockchain, different things here, or is it artwork because basically it's being sold as artwork, But so luckily that craze didn't go on, so we didn't have to figure that out. But it was kind of a weird thing as well. But yeah, so just on what to expect a little bit. The custodian is not a fiduciary, doesn't provide investment advice. So do know every once in a while you might get a non-answer. If very often people are like, is this a good deal? Can you tell me, should I do this? The self-directed place does come into here where it is really up to the discretion of the investor, or talk to an advisor, talk to somebody who's putting deals together. This is where you're going to lend on the expertise of people who actually know the market. If you're not the one who wants to dig in and find your own deals, you want to rely on people who know the deal and know the market. But unfortunately, your IRA custodian can't really have an opinion on deals. We're really just there to make sure following the tax code, and like I said, I's are dotted, T's are crossed.
Yeah.
A new account opening, transfer rollovers, like I said, it can take some time. So if the deals come up really quickly, it's good to get that process started. Transfers can take 3 to 5 days in the best, but a rollover from a 401k can take a couple of weeks. So it's good to get started ahead of time there. The custodian is going to review investment docs. In most cases, this is a great thing. But some people are like, oh, I can't do this investment because sometimes docs don't come out until the end. Many times we're waiting on a closing, or like, you're supposed to close in a couple hours. Where's the closing docs? Like, not done yet. The title company's still printing them out. So we do take a little bit of time to review just to make sure everything's done correctly. But that is a good problem because you want to make sure it's done correctly, and you're going to keep those benefits of the account. just something to keep in mind of. Some groups are a little slow in the review. Ours has to be we tell our team it has to be done in the same or the next business day for review. The authorization or buy direction forms, this is really just the custodian will summarize, where the money is going, how many shares you're buying, what the amount is, the parties involved. They'll put that on a form. So just know you'll have to fill out that form. We pre-fill all that information for the investor, but there are groups who will hand you a blank one and have you fill it out. So just know that is a piece of the process.
Mhm.
Fair market values are something that come into play with retirement accounts because one requirement we have with the U.S. government is that we have to do value reporting once a year. If you're a passive investor, you've invested in someone's deal. As an investor, you really don't have to do anything here. The sponsor provides you the updates, tells us what's going on. We use that, so you get to continue being passive. But if you are a little bit more an active investor, we just need evaluation. It doesn't have to be exact. We don't need an appraisal or anything like that. We take Zillow estimates, tax assessed values, anything really, just put a dollar amount on it. Yeah, exactly. So it doesn't have to be overthought. Once you're of RMD age, which is 72 right now, but that's the age you have to start taking money out of retirement accounts if they're like traditional. The fair market value has to be pretty exact then, but most people have a lot of time until that point. Some of our specifics, as kind of mentioned, we have dedicated points of contact, so you do have someone you can kind of lean on as far as can this be done, how should I structure it, kind of things like that. I'm gonna give that legal piece, but like how can my retirement account be involved in this deal? And then I should just kind of touch on most custodians all custodians are going to have a fee. So just something to come out. The benefit of the self-directed space is it's very upfront. Every custodian basically has a fee schedule. You see it, you know exactly what they can and can't charge for. It's there. Other financial products, it's hidden. You have to search for a 12B1 fee. Even doing this industry for 10 years, it's really hard to find what your 401k charges you. Most people say there's no fee in my 401k. It definitely is. It's just really hard to find. Sometimes your statements, but sometimes you have to dig through plan docs and just figure out like, all right, well, like there's a reason they have skyscrapers in most major cities. These, companies aren't doing it for free. They're making pretty good money. But it's hard to find.
That's not philanthropy? What? Yeah.
It's not. No, they do really well for themselves. So even if you're not getting commissions, yeah. So luckily in the self-directed space, everyone's kind of gotten close to a nice median on fees. Most are going to be within $20 to $50 of each other a year. So definitely some squeezing there. It used to be wide variations. Most are pretty good, but if you have a pretty good idea of what you want to hold in your retirement account, it does make sense to look at some fee schedules and just kind of compare, because some are meant to hold a lot more assets. Some are meant to, like, if you hold one or two investments in your account. We have a little bit of both. So we have two options, like one that's just a flat fee. And then we have one that's more like a, however much you want to invest in for a certain dollar amount. So that gives it a little bit of a leeway on that. And you can switch whenever you want. But just wanted to bring it up there that there are lots of different options, as far as that goes.
Okay.
Process pretty simple. I mean, this is our kind of example, but basically it's a link to our website, online application. You're set in about 15, 20 minutes, DocuSign. We'll start working on the transfer from where those accounts are. And then we just need to know what the investment is. We can get providing that work. So like I said, in most cases, we'll get that done in 7 to 10 days. If you already have an account, really it can be like 1 or 2 days to get an investment done. It's just really that initial startup that can take a little bit longer, but pretty simple process for investing in alternatives.
Yeah.
And then I'm ready for questions. I'm going to flip it to my calendar link and my contact info, so that way if people want to ask questions one-on-one, but definitely happy to help out.
So Michael had asked, what would be the option to do withdrawals and transfer to self-directed, which I think you probably just covered on the last slide. So Michael, if he addressed your question, just let us know. Otherwise, let's just say if we can walk through a real life example, right? So I worked in the casino business throughout my 20s. Didn't start really taking on a 401k, even though it was a company matched like 6%. Until my wife was like, they're giving you free money. put some, put some of your paycheck back and start to build this up. And well, so I started doing it. And over the course of just a couple of years, I had, a few $1,000s. And whenever we first started investing, because then I started, investing in my 401k with every other job. And in 2015, when we started investing, we had these people that would come out and they would come from Equity Trust and some of the other custodians, and they would talk about using your self-directed IRA.
Mhm.
Well, for me, I didn't really have much of one to begin with. It At that point, I think it was like $30,000, right? So we go in there, and I never paid attention for like 2 years whenever they'd come out there and speak, because it was always, I don't have enough. No, I don't have enough. Until one day a guy just kind of changed my perspective and said, you can wholesale and you can take your assignment fee and roll that back into your retirement account. Then kind of caught my attention. So, what would you say would be, I guess, a good amount for somebody to start seed, a self-directed IRA account?
I mean, so typically that's a pretty normal amount. So
Yeah.
we see, 20, 30 is pretty normal. That's good enough to like justify any kind of fee. And a lot of times you can get started on a lot of investments. If you're looking more to be pretty passive, I think minimums are normally 25 to 50. But you can get started, like you said, being creative, figuring out good ways to wholesale a deal. Be
Yeah.
tenants in common with yourself. If you're going to go buy a property and you're like, well, I can do this outside my retirement account. Well, maybe your retirement account buys 10% of the deal and you have the other
Yeah.
90%, just a way to keep growing in. So yeah, you can be pretty creative when it's not like there's no investment minimums. It's not somebody else's deal you're investing into. So you can get a
Yeah.
little bit more creative on lower amounts. Kind of can lead into the question for Richard there. So independent contractors have actually a lot more options. So yeah, you can, if you're starting from scratch, your contribution limits are higher, and that's kind of nice. So to Lee's point, if you're brand new, no retirement account assets held. The downside of traditional and Roth IRAs are you're capped at $6,000-7,000 a year you can put into the account. So you gotta get creative with lower amounts. If you're self-employed, you have solo 401ks as an option, SEP IRAs, simples, which have much higher contribution limits, 10 times the amount in some cases. So if you have enough income, you can put $50,000-60,000 a year into these accounts and really grow much quicker. So yeah, you could still do those accounts, but if you are self-employed, and with the 401k self-employed with no employees, so you can do a solo 401k. And we could spend a whole hour talking about solo 401ks because they are a little bit different, but it's a powerful tool for getting in. So the investment options open up a lot if you're self-employed. But yeah, if you're not self-employed and you're just working, it's nice to start. We have people who will set up a brokerage account too. So I know we kind of disparaged it in the beginning, but if you're really just trying to get patient, adding some funds to a retirement account, you can park it in the S&P while you're looking for deals or accumulate over a few years. I mean, it's kind of late right now, but over tax years, technically you could still contribute for 2014 and 2015. You don't have much you don't have much time. You got to file your taxes tomorrow, but you still have time to do your 2024 contribution. So you could
Yeah.
do 2 years of contributions in the next couple of days.
Or if you file your extensions, like most
Yeah.
entrepreneurs I know, you have until
Yeah.
October. but,
Yeah.
so,
Yep.
let's, if we could just kind of go into a little thing that you hit on. You said that you could actually take your self-directed IRA, and instead of just letting it sit there doing nothing, you could actually take that and put it into a brokerage account and go into the S&P and let it work while you're figuring out what other investments you want to do. Is that
Yeah.
Did I hear that correctly?
No, you're right. So I shouldn't say most, but a lot of the self-directed custodians will have either a third party that does brokerage or they have their own brokerage arm. And it's just really to
Yeah.
have a nice place to park cash when it's in between deals or you're getting a lot of rental income, and you don't want to transfer it all back. There's nothing wrong with having a Schwab account. They're really good at what they do. They're just not good at what they
Mhm.
can't do. But yeah, so Equity has both. We have a relationship with a third party brokerage company, but we also have our own equity brokerage services. Um, I said it actually spurred out of the idea of, hey, these people are getting a lot of rental income and note income coming in. They got to have somewhere to put it. Um,
Yeah.
but it works the same if you're just starting out too and you want to have a nice place to put it. And the best part there is once you are ready to pull the trigger on an alternative investment, it takes us a day or two at the most to get funds from your brokerage account to your account there.
So that's really kind of my aha moment for this presentation. So if I'm understanding this correctly, I can go over here, I can roll my account into self-directed IRA, and I can say, hey, look, I want 30% over here in the S&P. And I'm going to go over here and I'm going to lend the other 70% in a private deal or something to that effect, right? From there,
Mhm.
let's say that I get paid back from that loan, and now I've got 70% of my portfolio, call it 70,000 for round numbers, and I've got 30 over here working in the S&P, and I've got a couple, YouTube or TikTok influencers telling me to go and buy, X stock, right? So I decide I want to go run it up and then I invest it. It's a short term hold, more like, I hold it for a month or so and then I have another opportunity come up. I'm that liquid in
Mhm.
my decisions. So I don't have to
Yeah.
wait. And you said 1 to 2 days, I can actually pull and
Yeah.
fund another deal.
Yep.
Beats the hell out of a money market account. So
Yeah. Well, for the
yeah,
longest time, that was you had to have a custodian for your brokerage and not. But as the industry's matured, we've gotten that people want to hold it all in one place. They don't want to have multiple statements. They don't want to have different things. So it kind of helps
yeah,
with keeping things under one. And like you said, for ease of buying those alternatives, it's a lot easier just to liquidate your stock holdings and then transfer it within the same account to get ready for your next
wow.
investment.
That's wild because one of the curiosities I've got is, and it might be possible, I've just never heard of it, but like, some of the larger shops, you guys have a brokerage arm. I don't know of any of
Mhm.
them having a custodian arm for self-directed.
So if you're investing in large REITs, you can probably
Hmm.
get Fidelity or Schwab to hold a REIT. But you have to be a pretty large company. You're not going to invest in the guy that you met at a REIT that you really think has a great business plan. You're going to have to invest in Blackstone, REIT or
Yeah,
BlackRock's REIT. So
which
so
might as well
yes,
grab.
yeah, they'll hold some alternatives, and Schwab's getting a little bit better on it. Um,
Yeah,
but it's definitely nowhere near as flexible as what you'd get with equity or another IRA custodian like us.
yeah. Wow. Okay. This is one of the things that I love about doing this, right? I have people on that really just kind of shift my perspective on things sometimes. And whenever you're over here and you have this one-sided view of, all right, well, it can do this. No, you just opened up a whole new world of options for me. So no, I appreciate that. And hopefully, whether or not somebody's watching this live or they watch a replay or anything else, they can have the same kind of like aha. So, real quick, as we get ready to wind it down, I want to be respectful of your time because, well, it's almost 9 o'clock and they want you to be
Yeah.
at work in the morning. So, with that, what would you say is kind of like your takeaway? What would you encourage somebody to really look at if this is now a curiosity for them? Where could they kind of go? Do you have any resources or education libraries with equity trust that they could look at?
Yeah. The website link in there will take you to our homepage. Equity does a really good job in education. So they'll kind of deep dive into different asset classes that you have interest in. Maybe there's an asset class that you're like, oh, well, I already do this, so I want diversification. So there's a good place to learn about different alternative assets there. Um, Book a call with me if you have questions when I bounce through stuff. But we really dug
Yeah,
into this alternative space, and as far as like next steps, just think about, would my retirement account be a good place to get that diversification? I said
yeah,
we've seen a lot of volatility in the last week or so, and it's kind of nice to be able to not put all your eggs in one basket and look at how can I grow my retirement in maybe a safer way, or maybe chase
yeah.
get better returns too in some cases. So
Well, that's a fair point. Especially whenever you have people out here that, we were watching, what the volatility was doing, right? And I made a post last week that my stock portfolio was down 26% from the beginning of the year. And that wasn't really a good feeling for me, right? So it
yeah,
was, Well, it was a good thing to have this call because this has been one of the things I've been looking at is all right, is it performing that I need the way that I want it to? Should I move a little bit over because well, I'm already doing private money lending. So what's the difference of doing it with our other funds versus some self-directed IRA? I can still grow at the percentages that I've been getting for myself and my investors. So all right, I might just do that until we see things kind of calm down. Then I can just nest it back into the brokerage. So no, this is man, this has been great, dude. Thank you. And I know that you live right up the road in Fort Myers. So if you find your way down here, we'll grab a lunch someplace. And in the meantime, if any of you have any questions for Matt, his contact information is right there. Feel free to give him a call, email, scan the QR code. And you've been a great resource. So thank you again for even coming on here and spending your time tonight. I know this isn't everybody's ideal use of a Monday. So thanks again, Matt.
And thanks again for having me. Appreciate it.
Yeah, absolutely. Well, I'm going to go ahead and end the stream now and then we'll wind it down. So just stay with me right quick, Matt. And for anybody else, I appreciate you coming on and watching this. And if you're watching the replay, I want you to just reach out, comment. I'm sure I'll be notified, or you can just reach out to Matt by the same way that he left his information. You can look me up the same way that you found this video. So I hope y'all have a great night and continue to go out there, grow your wealth your way. Have a great night.